Good evening, everybody, and welcome to our video DD for the week of June 1st through June 4th. Our trading week this week will be 4 days, as today, Memorial Day, the markets were closed. The first thing I want to cover this week is our ascending channel. This is a pattern we've been following for several weeks now, and it's continuing. There's been really no change to speak of. It is beginning to form kind of a bullhorn shape, and this is known as a broadening formation. Normally, this is a bearish signal, but I believe that due to the inflationary nature of short sales on GameStop stock, which is covered in my previous DDs, you guys can check those out here on the Video DD channel, or you can also check out my Reddit profile and kind of dig those up. Because of that short inflation theory, I think that there's not really a lot of shorting power going on. And so we're seeing this broadening formation trend up, which is rare. Usually they're kind of horizontal as volatility picks up. They broaden out until they settle at a range. And so ours is an uptrend, and this really implies three things. GME is undervalued. Shorting is not profitable. And the potential sellers, apes and funds and whoever owns this stock, they're not selling. And we can see that here on the 4-hour time scale. Another note is even though we experienced that downward pressure on Friday, we're still well within the formation. I know a lot of people were kind of freaking out, but no, there's no reason to. As it's broadening, that also gives us more range for our price to move. As volatility increases, so does the range in which our resistance bands show us the stock can travel in. And so if we look back at previous short attempts, these three here on the previous week's formations, and then we actually look at this week's short attempt. So this was our bull flag formation, and then this was the short attempt. And then we had this deviation from the pattern. But this short attempt was very weak in comparison to the previous weeks. Our price drop was inconsequential compared to the upward pressure, and so we ended up breaking out super early to the upside, and then kind of trended down towards max pain by the end of the week, but still significantly above it. Due to this downtrend, though, I do think tomorrow that we can see a dip down to the range of 212 to 217 before continuing upward. So essentially, I think we can bounce slightly off of this this lower resistance here, and I think we'll see some move to the upside after that. That may not happen. We could just move to the upside immediately because the European markets were open today and the US markets were closed. There could be some kind of crazy after hours price action this morning, but you guys can join us tomorrow in the stream at 9 a.m. to find out more about that. One last thing I wanted to point out on this chart was that deviation that I was discussing. Every week we've trended up and we've ended above max pain slightly. This week, significantly above max pain. But the deviation is strange. We should have expected a pattern following the pattern of up consolidation and then another move to the upside. But instead, we kind of had this pattern before we settled back into that consolidation trend. And I think there's three possible explanations for this. One, FOMO kicked in. This is probably the most likely. As AMC was running, media started to express, positivity towards quote unquote meme stocks, and people simply didn't want to miss the gravy train. People know, a lot of investors know that when these stocks run, they can run pretty significantly, and so that's the most likely explanation. The second most likely explanation is we just simply had a correction. We ran far harder than expected, and we had a little bit of correction back to mean before we can continue upwards. Perfectly normal consolidation and natural stock movement. And then the third, and this is theoretical and kind of speculative, but if you guys have been following along, you'll know that the first short that gets out is lucky, right? The first one to close their short position on this stock, that's a huge win, because as time goes on, it will be progressively more and more expensive for those shorts to cover, infinitely more expensive, as a matter of fact. And so there is a possibility, although slim, that this deviation we saw was a small margin call on a small short position, um, and they covered. And that could be the trend we saw. And if that's the case, it means that the dominoes have begun to fall, that we have reached a price high enough where short positions are beginning to be called. Now, this could play out in a number of ways over, the next several weeks, but we really don't have any inside information on it, and so I don't want to put too much reliance on this theory, but I do want to talk about it. I'll be paying very close attention over the next several weeks for more deviations in the price like this. So any breakaway from our general uptrend, I'm going to be paying very close attention to volume and volatility during that time. Is all the pressure buy side? These are like kind of the questions I'm going to be asking myself in order to reaffirm the logic that backs this theory. If not, I think we're just going to continue on this uptrend. Next, we'll be taking a look at the indicators for this week. MACD, as always, everyone's favorite first. It's continuing its divergence. It looks like it's going to continue to trend to the upside, at least for several days longer, especially if we kick up in price action. This could extend much further as the signal line continues. So definitely positive looking forward on the MACD. Next, I want to cover BBKC and TTM. This is an indicator we've been tracking kind of all along since I started doing this. As you can see, well, it's kind of hard for me to express this one. So BBKC is fired. The Bollinger Bands are beginning to extend outside of the Keltner channel for the last 4 days. We have an uptrend. As you can see, these uptrends can go for a very long time before they begin to revert. But when you look at the BBKC aspect of this, it's really kind of crazy. I'm going to zoom in on this so you guys can really get a good look at how nuts this is. Because this is our January signal back here. And this was the price action that occurred off of it. We went from about $20 to about $480. In March, this was our signal period. And we went from around $100 to about $350. And now we're trading at 220. And this is our signal. This yellow defined box here is the entire consolidation period for this breakout. It's just going to explode. I mean, yeah. There's not much that I can say about this that you can't see in this picture, but it's going to be nuts. So I hope everyone's strapped in and ready for that this week. And lastly, I kind of wanted to just cover CVVWAP. The indicator triggered on the 21st during Pentecost when the markets in Germany were closed, which may have been an unreliable signal. So I'm going to be looking tomorrow morning as the US markets were closed today in order to kind of suss out if there's going to be another signal. Either way, increased arbitrage is relevant and can cause increased volume and a little extra volatility. So we'll see how that plays out first thing tomorrow morning at 9 a.m. Thank you guys so much for tuning in this week. As always, I appreciate your support. If you have not dropped a like or a subscribe, please do that and hit the little bell thing so you can get some notifications about the videos I'm putting out and information from our community tab, where I kind of try to keep people abreast of anything that I find new throughout the week. And lastly, if you guys want to support the channel, there's a donation link for our Ko-Fi down below. It goes a really long way to helping me to keep doing this and take time off from my regular job. And as always, thank you all so much, and you have a wonderful night.